Result in the end, the market finishing at the highs of the session, especially given that we have seen stocks like QBE and Oil Search trading ex-dividend today. And once again, a large number of companies hitting either an all-time record high or a yearly high. And if we have a look at some of those companies, a lot of them were in the new online media space. If we have a look at companies like Xero, Seek, Flight Centre, iCar Australia, all of these reaching new highs. But we also saw a number of companies in more traditional areas. In fact, in the resource area, we saw Bannerman Resources, Grange Resources, all reaching highs. We also saw Air New Zealand and CSR and Certex reaching highs as well. On the flip side, if we have a look at those companies making lows, a lot of them were related to mining. We did see Mermaid Marine, ALS, as well as Regis Resources, but also in that consumer discretionary space, which actually did quite well today. On the back of those retail sales numbers, we saw the Reject Shop as well as Pacific Brands reaching fresh 52-week lows. Those retail sales numbers, I think it gave the market a huge boost, especially that consumer discretionary sector. JB Hi-Fi was one of the standouts, up by 2.2%. We also saw Super Retail up by 1.6% and Myer gained 1.5%. But you know, earlier on in the day, we saw every single sector trading lower. But by the end of the session, the material sector was high, the industrial sector was higher, consumer discretionary, financial sector, the telecom sector, as well as the utility sector. So nothing like how we started off the morning, the market actually finishing on a high. This is the next stage of the bull market, and I think Peter may be right there. You don't want to focus in on those defensives. If you have a look at when the market goes up, it's typically those areas like the telecom, the utilities, the healthcare space, which all underperform. In fact, you want to be focusing in on growth, and that's really why you are seeing some of those mid-cap and the smaller companies reaching these fresh highs. While the market was flat today, we saw the ASX 20 actually down by 0.1%, so they're the blue chips in the market. But if you have a look at the mid-cap as well as the small-cap index, we actually saw a rise. So the mid-cap index was up 0.4% and the small-cap index was up 0.2%. So I think this is a stage of the market where investors really do focus in on those companies that do offer growth potential rather than the defensive characteristics. And we are coming out of a period, I think, where we have seen the market just focusing in on those large blue chips, the yield at the high yielding stocks, and I think now we are moving to focus more on growth.
Online focused stocks. We saw car sales come out, announce another acquisition, another movement growth in Asia, this time South Korea. Do you like this strategy?
If we have a look at car sales, yesterday it announced that it had bought another 3% stake in iCar Asia, and we didn't see the stock really moving, but today a more substantial acquisition, a 49.9% stake in a South Korean car-based company, and the stock was up by 5%. So the market really backing this move, and really for car sales here in Australia, it's a saturated market, it's a mature company, and they are looking to other markets now to aggressively grow. We know that there's a 23% stake in iCar Asia, which of course deals in Thailand, Malaysia and Singapore. They've got the 30% stake in Web Motors, which deals in Brazil, and now they have exposure to South Korea as well. Now, if we have a look at Encar, it has both auto dealerships as well as the online side of the business, and car sales only buying into the online side of the business for $126 million. It looks like it's going to be earnings per share accretive, and if we have a look at this business, it owns around about 2/3 of the used car market in South Korea. Around about 86,000 cars annually are traded through this particular portal. And I guess from Encar's point of view, they really want to replicate what car sales has managed to do here in Australia. So it does look like a win-win situation for both companies. For Encar, it does have the expertise of car sales to try and replicate that strategy in South Korea. And from car sales point of view, you know, in the half year, its revenue only grew by 9%. A lot of these markets, we are seeing very strong double-digit growth, so it's able to aggressively grow. So the market liking the possibility of that growth option, and not only growing by acquisition, but now looking at organic growth as well through those acquisitions it's made.
Online classifieds, if you like, at current prices?
I think these online classifieds are seeking out growth, and as long as that growth is going to come through and there's a plan for growth, they remain interesting propositions. I mean, if we have a look at, for example, iCar Asia, which deals in Thailand, Malaysia and Singapore, these are parts of Asia which are growing very strongly. The middle class is coming up very strongly, and the demand of cars is rising strongly. So just looking at those three markets and the ad share that come through from those three markets is already more than the total ad spend for cars in Australia. So they're very strong growing markets. I don't think they're just going into any sort of market. They are targeting those areas which are growing strongly. Brazil, the same thing, where we are seeing a strong rise in terms of wealth. So I think it's a smart strategy by carsales. Here in Australia, I think it is quite mature, and if it was to remain only domestic, I think it would really struggle being a growth stock, but it is entering into some of those high growth markets. And I think carsales does have expertise. It does do what it does very well in terms of the Australian share market. And the great thing is it can take that model to other markets and try and replicate it. So I think it's a good move by carsales. And it does look like the South Korean company Encar as well, just welcoming that expertise that carsales will bring to that company.
What about a stock like Magellan? I mean, this is something that we've been talking about for some time, just goes up and up and up, seemingly, in terms of the investments that they've made, many of them offshore. What about it at current prices, Julia?
Well, it does look fairly valued at current prices, and I guess Magellan Financial Group, we're still expecting to see growth of 25% per year over the next 5 years. So we're still predicting aggressive growth, but of course the share price has run so hard. Today we saw the shares hitting a record high, the highest that it's ever traded at. And given that over the last 24 months, the last 2 years, we've seen the stock rising by 722%, it does look like there may have been some profit taking going on, because by the end of the session we did see the stock down by 0.3%. That's been a phenomenal run for Magellan Financial Group. Back in 2012, funds under management was $3 billion. Now, that's a lot of money, but today, the February numbers, they said that funds under management was $22.8 billion. In fact, they had almost $1 billion worth of net inflows during the month. And I guess what Magellan Financial Group does well is that it does have this track record of outperformance. It does its marketing really well. A lot of Australians do want to diversify and get that overseas exposure, and it has scale now, so it is able to keep those costs down. So as long as that outperformance continues and the fund inflows continue in, I think it's a very good business. And they're the type of businesses that investors really want to look for, the type of businesses that are scalable and have a low fixed cost, which are quite attractive, because when that scale does come, it is an extremely profitable business. And the share price, as you can see, over the last 24 months, up 722%.